Simply put, the Times has had a bit of success with the former, which has led to a bit of success with the latter. In those dark days, the nadir of the Great Recession, it was legitimate and even logical to call into question the Times as a going concern. Advertising was tanking and so too print subscriptions. An ambitious paywall scheme launched in 2005 was an embarrassing flop, a former Times editor told me. An unlikely savior emerged, you may recall, in the form of Mexican billionaire Carlos Slim Helú. The previous September, that is September 2008, when the U.S. financial system was melting down, Slim bought a 6.4% stake in the New York Times Company, or 9.1 million shares, worth some $127 million. The stock was then around $13. Immediately after Slim's purchase, the situation became much worse, both for the global economy and, as noted, for the Times. But as talk of bankruptcy amplified, Slim stepped up again. In January, he loaned the company $250 million in the form of 6-year notes with warrants that are convertible into common shares, the company said in a statement. The notes also carry a 14% interest rate, emphasis added, with 11% paid in cash and 3% in additional bonds, the Times dutifully reported on itself. Before we tell the tale of the Times's reversal of fortune, a quick note about Carlos Slim. With a reported net worth of some $60 billion, one of the richest human beings on the planet, and other successful investors. They buy low. They buy when everyone else is running for the exits. When everyone thinks they are making a huge mistake. They see things others don't and they make big bets and, yes, often extract onerous terms, because when they are making their offers, no one else is. Warren Buffett has been known to do this. It's also worth noting that Slim's sugar daddy investment preceded similar moves by Jeff Bezos, The Washington Post, Laurene Powell Jobs, The Atlantic, and Mark Benioff, Time magazine, by many years. Earlier this month, the Times posted some numbers that illustrated the results of this growing customer interest, numbers that caught the stock market by surprise. Digital revenue grew to more than $700 million. Digital subscribers climbed to 3.3 million, up 27% from 2017. And maybe the biggest news of all, digital advertising surpassed print advertising for the first time in the fourth quarter, jumping 23% to $103 million. Wow! The lines on the chart finally crossed. Now that's a landmark moment. And so the Times's stock has jumped from $22 on December 24 to its current price of $32, a 14.5-year high. Remember, the stock was at $3 and change almost exactly 10 years ago, up nearly 10x since then. Now let's return to Carlos Slim and his investment. How has he fared over this long decade? Well, pretty well. Newspulse Finance's Max Zahn crunched the numbers. It's a complex and sophisticated series of investments, but here's what things look like. According to SEC filings, Form 4s, Slim has sold at least $270 million of stock since he began paring his stake in 2017. He's also been paid at least $11 million in dividends. Plus, his $250 million loan was repaid in 2011 after $122 million in interest payments and an additional $29 million, likely a prepayment penalty. It's worth noting that there may be facets of this deal-making that we aren't seeing. Slim's spokesperson Arturo Elias Ayub did not respond to multiple requests for comment. And along the way, Carlos Slim made many hundreds of millions of dollars. Who among us saw that coming in February 2009? Andy Serwer is editor-in-chief of Newspulse Finance. Michael Bloomberg could absolutely defeat Trump, says major Democratic donor Stephen Ratner. A simple, yet radical solution to solve Facebook's problems. Netflix can continue to raise prices amid new competition, says media mogul Barry Diller.